Hello everyone, welcome back to the channel. Today I want to make a video about my top holdings by equity, and hopefully I make a good case for each one of them. I do want your opinion and see what you think about them because they are kind of high risk, so we can discuss it and see what their potentials are. So not to linger any further, so I'll just start right here by clicking on the setting of equity. And so my top one is hyperfine right now in my Robinhood account. And the reason it's one of my biggest is due to the fact that it is doing MRI imaging where it can be pushed to the bedside of the patient. And as I mentioned in other videos before, I do work at an ICU or critical care unit where transporting a patient can be such a hassle because they have electronic monitors in place, they have their infusions going, and a whole bunch of other equipment attached to the patient. So it is very difficult to actually move a patient from the patient's room down to the MRI room. And the MRI room is usually very specialized. It can't have anything metal around it. So it has to be very secluded in its little area. With Hyperfine, they actually developed a portable one that has like 0.01 Tesla in power compared to like 1 Tesla, which is one of the higher end ones, but 0.01 Tesla, which essentially it's able to take a magnetic image without causing any disruptions in the room as far as the magnetic portion of it. So I have high hopes for it. They are expanding internationally right now, and one of the CEO is Maria Sanz, and she was actually on the board of directors for Shockwave Medical. So I do have high hopes that she can help this stock out. The next one is Rocket Lab. Rocket Lab is a pretty popular stock because of the fact that it's trying to beat, not necessarily beat, but trying to give competition to SpaceX. But the thing is, people don't know that Rocket Lab also has the HASTE program. They have satellites, the spacecrafts, and then the launch services that they provide to other launch services or other launch companies. So I think the biggest risk for Rocket Lab right now, though, is their Neutron program or the Neutron rocket that's supposed to take about 200 kilograms to space, and it's supposed to be renewable, where it just sends that rocket to space. It drops off the payload at low Earth orbit, and it comes back down and it lands exactly where it took off. Well, that's a very risky move, and so I think that's going to be a catalyst, or it's going to pretty much make it crash at the same time. Although Rocket Lab is diversified, usually single events like that could be a potential catalyst can also be a huge negative impact to the stock. So that's why I'm hesitant to buy more. I did take profits on a lot of my stocks. Actually, I actually posted that on Twitter, and at that time I actually lost a lot of followers because like I secured about 150,000 because my portfolio rose to approximately 2,000% in the max time frame. So I was like, there's no reason why I need to hold all of these with just potentially like I could lose all of it again. So I secured at the time closer to half of it, and it's actually just grown all over again. So it's back to 222,000 as far as just my stock holdings. The next one is Robinhood. I actually really like Robinhood. I like their services. I like the credit card implementation. And if you're a gold member, you can actually get that credit card, and the rewards on that is actually phenomenal. I got rewarded closer to $1,000 because I had expenses that I was going to spend anyways. So I spent about $25,000 to buy, actually, the reason I spent $25,000 was to buy a private equity into this company called Start Engine, which offers private equity to regular shareholders like us. If you're not an accredited investor, you can actually buy shares. So Start Engine is still private, but you can buy shares right now if you go to their website. I was actually able to invest 25,000, which actually matches you to 20% of more shares on top of what you're buying. So I ended up getting extra shares, and I've been invested in Start Engine for a while as well. So I think it's just going to grow phenomenally in the future. The next one is Sofi. I actually secured a lot of profit from Sofi as well because I averaged at $7.87 and I pretty much secured at 120%. I sold more than half at the time. I actually did use a little bit of margin with Sofi, so I secured those wins, and now I diversified into the other stocks. So my strategy overall is pretty much having a lot of equities because the people buy the S&P 500. So that's the 500 top companies in the United States. So my strategy is a self-managed ETF where right now I have 92 different equities. So the ones that go up, I start selling, and the ones that start going down, I start buying. But before I buy, I do have to do my research to make sure that that stock is not collapsing for a reason. IONQ, I actually secured the profits of like 1,200. So I'm actually really hyped out for that so this price is not accurate. Usually once you sell and realize those gains, whatever the last few shares that you bought is what your average starts becoming. So because I sold the shares that I bought back in the days when IONQ wasn't really, or when Quantum wasn't really a talk of the town. So I was able to secure really cheap shares. So my earnings actually were 1,200%. Moving on to Serve Robotics, I actually have videos on pretty much all of these. I don't know if I have a video on SoFi or Robinhood yet, but for the most part, I do have videos on Rocket Lab, Hyperfine, IONQ, and on the quantum comparison videos. So if you're interested in those, make sure you click on this channel, and there's part 4 right now. That's the latest one. And I do plan on making more videos, but just if you are following this channel, IONQ, I did secure profits at 1,200%. But I still own 200 shares of IONQ. Same with Serve Robotics. Pretty much it's been going up. It's one of my top holdings right now. So I'm just kind of holding these for the long term. So usually I'll hold, let's say it's 100% of my account right now, and let's say it makes a huge drastic gain such as IONQ, I'll usually sell 3/4 of it and I keep the 1/3 just for the long term, and I just kind of let the market dictate what happens with those shares. Lemonade, I was able to sell it at $50 actually, and I see now that it's back at $33. So I'm buying little shares here and there for each one. Palantir Technologies, I feel like I don't have to say much about this one. It's such a good company. It was included in the S&P 500. So long term, for those long term investors, they're just investing their money into the S&P 500, therefore kind of contributing to the price appreciation of Palantir. Rigetti is another one that actually rose drastically at some point. I actually did sell at $15 and secured a bunch of profits with Rigetti. It's also a quantum stock, so now it's back down. So I'm kind of excited that it's coming back down because I have average recurring daily investments on each one of these stocks for the most part. So I'm just happy that I'm buying cheap again. Quantum does have a lot of time still to develop. I know Mark Zuckerberg and the CEO for Nvidia came out and said that we have 25 to 30 years or so before quantum actually becomes a thing. So hopefully they're wrong. D-Wave, their CEO, has made a few appearances on the news, and they said that, this is the time that D-Wave has a product that they're using already. So hopefully it is shorter than 20 or 30 years, but we'll see what happens. I am diversified into slightly risky sectors, but I am diversified in over 92 shares right now. So therefore it kind of minimizes my risk to like a B compared to like an A, like being like a blue chip stocks only portfolio. And the rest of these, I could just kind of scroll down. I have Root, The Honest Company, Oddity. I actually have a video on them as well. Cognix, I also have a video on it. I think it's a good robotic stock, especially for 3D vision. So that's the reason I bought it. Intuitive Machines, I also made a video on it because of their potential on the moon and their ATVs on the moon. So hopefully they get more contracts to start making more of those ATVs. The next one is Senseonics. It's one of my favorite ones. It's actually my other biggest holding. So Senseonics should technically be up here right after Hyperfine, because on my Sofi investment account, I have 71,000 shares, which is right now it's equivalent to $50,000. So I'm waiting to see what happens with this stock. Right now it's up to 76 cents. So it's not bad. It's not bad at all. And I with this account, let me see what the price was real quick. What I averaged here. So 46 cents. Okay, not bad. Oklo is another one. It's for, since AI uses a lot of energy, and Sam Altman actually is one of the people on the board, I believe. And Oklo is doing a nuclear fission to help with renewable energy to help power a lot of this AI demand. Lumen Technology, formerly known as CenturyLink, they do fiber connection throughout the world. They have one of the biggest networks. So at the time, I just kind of saw it. I saw it go up for a little bit, and I started doing some research. Fiber is actually such a huge market, but at the same time, it's very hard to implement because you have to dig through the ground and lay all the fiber connections. Other methods include just kind of putting it through the air, but with those connections, there's risk of like lightning and somebody cutting it, or something can happen with it. So Lumen Technology still carries a lot of risk, but I got lucky to actually be invested in it. Dutch Bros, the coffee company, I like their business model. It's just all drive-through. My concern with them though is that they don't have a lot of healthy options. A lot of their drinks have a lot of calories, and I work in the healthcare sector, so in a way that's kind of job security for me. But as an investor, and potentially in the future where like health people are gonna start talking about it, that's potentially a con for the company. Tesla is actually one of my top holdings as well. On my Fidelity account, I do own 100 shares. And my other IRA accounts, I do have other shares as well. So Tesla should technically be up here too if I were to combine all my holdings into one page. Block, that's Square Cash. They have a music sector too now, so I'm kind of interested to see how that's gonna go for them. But they are undervalued according to investing.com, so I just kind of seeing what happens with it in the future. Joby Aviation, they have the most FAA certifications, and that's why I invested in Joby specifically. There's other ones such as Archer, Vertical Aerospace. Those are like the other two that I liked, but Joby Aviation has the most FAA regulations, which is important to get in order to actually fly around the cities to do the air taxis that they're promising to investors. Hims and Hers, another, it's just small holdings. It used to be one of my big ones as well, but I secured some profits, and I'm pretty much just leaving it be and see what happens with the current shares that I have, which I have 102. And from now on, I'll just kind of just say the names of the stocks that I'm holding. If you have any questions or concerns, just let me know. I am interested to know which ones are your favorite stocks, or which ones are your favorite holdings. And right now, I am very diversified, but I'm kind of diversified into risky stocks too. So in a way, it lowers my grading from like an A plus to like a B minus. So my portfolio is risky. So Spotify, Shopify, Applied Digital, Disney, Arm Holdings, Unity Software. Teradyne is a robotics company. They work with the software and like the robotic arms. So I do see potential in it. And the reason I even found this stock was through Kathy Wood. She has extensive research on the robotics sector. So if you're interested to read more about the future, or what people are predicting for the future, I definitely recommend you check out Kathy Wood, because she does a lot of research. She's also into genomics, and such as like DNA editing. That's another sector I'm really intrigued by, but at the same time, I personally do not invest into biotechs anymore, because biotechs are very risky unless you have a PhD who understands things at the molecular, at the DNA level. I would not really touch a lot of biotech stocks because they can have all these promising results. So for example, back in 2018, Novavax, the one that makes the vaccines now, used to have these promises about RSV, like, oh, if you inject them into the amniotic fluid for like a pregnant lady, the child would have less risks in the future or whatever once they're born. But then once tiny little article came out saying, okay, there was a failure in this phase of the research, and the entire stock just tanked, and I lost at the time $10,000 as a college student at that time. That was a lot of money. So definitely, I don't. That's why I don't touch biotech stocks anymore, because they're just very risky. So these are my lesser holdings. So Carnival, American Express, Alphabet. I actually should probably start adding more Alphabet shares because of their quantum, such as Willow is one of the things that I'm kind of hoping for and seeing what's going to happen in the future with. Amazon, I just use Amazon, and a lot of their services are really good, such as Prime, AWS, and they're also working with quantum as well, but they're mostly providing the service of quantum, so not necessarily providing the hardware or anything like that. NanoX Imaging, they do x-rays, but they use a different method compared to the traditional ones. Now the traditional ones use like a heating method, and NanoX uses a cooling method that makes it much cheaper, and their business model includes just kind of giving the machine to the company, and excuse me, I'm trying to think. So they give the machine to the company or the hospital, and they charge by the scan. So that's what their business model is. The other section that I like about NanoX is the fact that they have a room or a collection of radiologists that they can pretty much rent out to different facilities. So these radiologists are pretty much teleworking, and a hospital can just call up, hey, I have a patient with chronic obstructive pulmonary disease, or they have a fracture on the left femur, right femur, whatever, and they send that report or that scan to the teleworkers, and they read that x-ray, and they send it back to the hospital for them to implement whatever care they need to implement. So I am still invested in them for those two reasons. Boston Scientific, been working in the critical care, a lot of the things that we use are Boston Scientific. I could go into more detail in the future, but there's so many things, as from like blood clots, breaking up blood clots, even just like the machines that we use to monitor cardiac output, cardiac index, so many things. So Boston Scientific is just kind of there. Like, honestly, sometimes, like, if I see their products a lot, for example, Medtronics as well, like I see their products a lot, that I'm like, okay, they have a huge moat. And although sometimes the analysts don't know what they don't know, so like, oh, like Boston Scientific doesn't have a huge moat, or Medtronic doesn't have a huge moat in the market. But if you see it pretty much at every facility that you go through, and I've worked at different facilities and I've seen pretty much the products everywhere. Starbucks is a risky play, but it's one of the additions on here. Verizon, I've had Verizon for a long time. I have thought about switching it out for T-Mobile because I think T-Mobile is much better, but Verizon pays me a really good dividend, so let's just kind of let it be. D-Wave, I've talked about earlier, but that's another quantum play. Aero Environment, the reason I added this one is unfortunately due to war. Right now I've watched videos about, like, with Ukraine and Russia, and the Russians are like using drones as weapons with bombs or grenades attached to them, or the drone would drop a grenade on soldiers, and that's honestly really bad. But at the same time, people are gonna people. It's like a saying that I usually say, like, because people are always gonna be stupid. They're gonna try to start wars, and I keep a very neutral mentality about everything. I don't go red, I don't go blue. I just stay in the middle, see which one's winning. Okay, this is what I'm gonna buy because of this, you know? So it's good to keep that mentality, because once you get too emotionally involved, you start making mistakes. And that happens a lot in the stock market. Figs for scrubs, Lululemon level, and they were profitable for a little bit. I think their earnings dropped, so the stock also dropped, but it's going back up again. Nvidia, there's so much to say about it. AI, gaming, their hardware that they're They're providing Hopper, Blackwell, data centers, so many things. And they're also involved with quantum as well. As a matter of fact, there was new announcements that said that they have partnerships with a lot of the quantum stocks. So I have to read that article, but I do apologize for delays on the videos. Sometimes I do work a lot, and right now I am working night shifts, so definitely it is stressful sometimes trying to do all this research, trying to keep you guys updated on my portfolio, because it is a lot. It's a lot. I do have a lot of stocks that I'm keeping up with, and a lot of them really aren't even that much in my portfolio. So 767. I do have other shares in other places. For example, I manage my wife's account. I have my Fidelity account. I have my M1 Finance. I have Robinhood IRAs and everything too. So it's kind of scattered throughout. Just not, I'm not trying to keep my eggs in one basket, because if something happens to Robinhood, I'm only secured up to a certain percentage. That's if it's even secured. I don't think these investments are on Robinhood. Extra space storage. I like their vacancy rating. They have like, they're like filled up to like 99%, and they actually pay a really good dividend. So, and I use their services a lot because I move every once in a while, like every 3 years or so, I would move. So I use their services, and it's just good to invest in the things that you're using as well, and things that you can understand. Like it's very easy and basic to understand a storage unit. And they also have insurance as well, so to secure the stuff inside the storage that you're buying, so you can pay for that as well. Oddity, I think it was up there. I think it switched up on me. Costco, Chewy, Chipotle, Boston Omaha, Lockheed Martin, Microsoft, Synopsys, Walmart, Medtronic, Iridium Communications, Talkspace, Tilray, PetMed Express for pets. I think it flipped somehow, because I know I said Cognex earlier. Fiverr International, GE Healthcare, Mercado Libre, Meta Platforms, Progressive, Honeywell International, due to Quantinuum. That's also the quantum play. S&P 500, I prefer to own the VOO, because it doesn't have the weird after hours, especially with stock options. If you do put credit spreads or covered calls or something like that, your options don't stay open for last 30 minutes, and that really actually messes with how your options play out. So I would rather not own the SPY, and I'd rather own VOO, because it's much better as far as the timing and closing of the markets and stuff. So let me see: Home Depot, Netflix, Alibaba, Baxter, Genworth Financial, Nike, Hippo, Intel, and these are the smaller portions in my account, I believe. So I don't know why it's acting up all weird right now. As far as cryptocurrencies, I do own XRP, one of my bigger holdings, and right now it's going up like 52% in this account. And the thing is, because I couldn't buy XRP on here, I used to own Dogecoin, and Dogecoin I averaged at 0.07, and it went up drastically. And unfortunately, I did sell all of it pretty much. And because they actually enabled trading of XRP on Robinhood. So for that reason, I was like, oh man, I'm buying, because XRP is faster, it's cheaper, it does not require a lot of energy like Bitcoin. It is regulated. It has the RLUSD that's going to be used for cross-border payments. And I just saw huge potential for XRP. So I essentially went all in on it. Not necessarily all in, it's 25% of my portfolio, or 26%. So I hope this video was helpful. I apologize if it's lengthy. I know I can be a little wordy sometimes, and I stutter, and English is my third language, so sometimes I mispronounce certain words. And I hope that you learned something. Let me know what you think. If you hold any of these shares, please let me know. And what do you think of my strategy for my stock holdings? Like, do you think it's too many shares, or do you think it's too little, or do you think it's too risky, or do you think it's too safe to a point where I won't grow as fast as somebody else? So just let me know. I'll be watching the comment section, and I hope to see you on the next one.